market color, right? So I'd like us to do me a little bit of a favor. Kindly share the link with everyone you know has an interest in Forex trading with your friends. Share it on your various social media platforms, Instagram, WhatsApp, Facebook, TikTok, what have you. Kindly share the link with everyone. LinkedIn too, I forgot that. Kindly share the link everywhere. Spread the news, spread the gospel of our market color before we proceed. Right? 30 seconds to do that. All right, so while we're still in the process of sharing the link, we'll just head straight to our analysis. I will be analyzing the dollar index, Euro USD, and GBP USD. Right, from our monthly time frame, we can see that price is clearly bullish to the upside, forming higher highs and higher lows. Right, so in the long term, or for this quarter and going into next quarter, probably, I am anticipating that the dollar will trade into this region on our monthly time frame. Then for our weekly time frame, right, we can see that price is clearly bullish to the upside too, right? From our fib swing, right, we can see that price got to 78.6% fib level, went to the upside, retraced into 61.8% fib level, and is going to the upside. And you can see that price clearly broke above this high, right? Closed above the high, and it is going to the upside. So on the weekly time frame, price is clearly bullish. And for every expansion, I'd like to see a retracement into this region. Let me draw that quickly. I'd like to see a retracement into this region. Going into the rest of the week, I'd like to see some sort of retracement into that region. Yeah, into this region on the weekly time frame. And where do I see price trading into? I also see price coming. I beg your pardon, on the daily time frame. Let's head straight to the daily time frame. Like the daily time frame is also clearly bullish. Price is bullish on the daily time frame. And we are seeing some sort of an expansion to the upside, right? For every expansion, like I stated earlier, we are expecting a bit of a retracement. After an expansion, there should be some sort of a retracement. And where do I see price trading into? I see price coming here, trading into this high, whereby resistance becomes support for price keep buying to the upside. So a bit of a retracement into the rest of this week on the XY before price continues its buy to the upside, before it continues its bullish trend to the upside, right? Same thing for our 4-hour time frame. I expect some sort of a retracement into all of these gaps here. I'll just draw that. Draw a rectangle here where I expect price coming to. If price comes into this region and doesn't hold, then price is coming all the way into this region, somewhat like an order block. So price will sell off into this region, a retracement, as I said earlier, before it continues its buy to the upside. Moving on to Euro USD on a monthly time frame, Euro USD is clearly bearish. And down to our weekly time frame, right? Let me just delete this. beg your pardon. Right? Price is also clearly bearish on our weekly time frame. You can see that price closed below this low here, fully closed below this low here. And then for the remaining part of this week, for the rest of the week, I'm expecting a retracement into this fair value gap here before price probably continues itself to the downside, taking out this low and trading into this fair value gap here on the weekly time frame. So on our daily time frame, right, price is clearly bearish. Has taken out this low, has taken out this one too, and then there's some sort of gaps left on the upside. So for today and into the rest of the week, probably into next week too, I expect that price will probably retrace into these regions here, these gaps here, retrace into this region and then continue itself to the downside on our daily time frame. We're looking for retracement. We're looking out to catch retracement, a buy to sell. The overall trend, as we have already established, is a downtrend. So any buy we're taking is just a retracement, buying to sell, right, for the Euro USD. And then for our 4-hour time frame too, right, I'm expecting some push to the upside, probably to fill up this fair value gap here before it continues itself to the downside. And if this doesn't hold, then I expect that price should come all the way into this region, buy all the way here. But if this holds and price gets here and we're seeing a bit of a reaction, then we will be warming up to take our sell to the downside, continuing our trend to the downside. So I'll just be looking out for a base on 1-hour time frame for the Euro USD and a variation on my 5 minutes time frame. If you want to have a clearer understanding of this base strategy, then you can just sign up for our FX Bootcamp training and you will have a clearer understanding and an insight into how the base works and what the base strategy is all about, right? Down to our pound USD, GPP USD. Monthly time frame, clearly bearish. There's no mincing words. Price is clearly bearish on monthly time frame. Down to our weekly time frame, right? Let me just feed from point A to point B. Right, you can see that price traded into 78.6% fib level and it slammed down to the downside. Then we can see that it retraced back into 61.8% fib level and it is continuing itself to the downside. But for this week, the rest of the week, like I said earlier, I'm expecting some sort of a retracement into this region. Into this region. I hope you can see this. Right? When price retraces into this region, then we can continue our trend, our sell trend to the downside, probably taking out this low and selling off all the way. And down to our daily time frame too, you can see that price is bearish. It was caught up in the consolidation for a while, broke out of it, and continued itself to the downside. For this week, I'm expecting a retracement. Probably price will retrace into this region to continue itself to the downside. So we are all on GU and EU they do the same thing. So on GU, I'm also expecting that price will retrace into this region, a buy to sell, right? Once price gets into this region, then we will be confident to continue our sell to the downside, our sell trend. GU is very bearish, EU is also very bearish. For our time frame, expect that price will buy into this region. And if this doesn't hold, then price is probably coming to fill this fair value gap here on the 4-hour time frame. Right? That's what I'm looking out for today. A buy of the GU and a buy of the EU. I'll just look out for my base on the 1-hour time frame for GU, and then 5 minutes time frame variation based on 1-hour time frame, and then variation on 5 minutes time frame, right? That will be all for this London session. If you have any question, if you have a different bias, kindly type in the chat box, right? And then I'd like to hear from our guys on the floor. CJ, do you have a different bias from what has been analyzed so far? Okay, like he doesn't have a different bias, right? So I just want to bring this to our notice that this session is being sponsored by Okta and it's brought to you by Value Flow Trading Hub, right? And also to bring to your notice that our ATM cash flow course is kickstarting today. If you want to trade or learn how to trade the synthetics, kindly sign up, because the Forex market is not open 247, but the VIX is open 247. When the market is closed by weekend, you should be making money during the weekend too by enrolling for our ATM cash flow training. All right, so right about now, we'll be going on a brief break. When we return, you'll be seeing CJ standing right before you to analyze precious metals and the yen baskets, right? Thank you for having me. If you don't have any questions, sit tight and enjoy the rest of the London session market color.
Hello and good morning. Welcome back to the Market Color, brought to you by Value Flow Trading and powered by your favorite broker, our favorite broker, Okta. Within this session, I'm going to be looking at precious metals, and to make reference to that, we're going to be looking at gold against the dollar, which is usually abbreviated as XAU USD. And then we're going to look at the yen basket, and I'll wrap it up with an analysis on one or two other yen-related currencies. After that, we're going to be taking commentaries and questions before we end today's market color. So straight up, we're going to be starting off with the analysis on gold. All right. Now, looking at gold, from where gold currently is, we know that gold has a natural bullish trend, all right? And from previous weeks, we've been seeing how that has been playing out clearly. And for today, looking at what we have on gold on intraday basis, I'm expecting to see gold, seeing that it is trading off from this other block right here, this 1-hour order block. So I'm expecting to see, yeah, this is the other block right here. So I'm expecting to see some push up from gold all the way to the upside, because this other opposite order block has not been fully mitigated. Okay, so it has created some room for inducement, and an inducement play may unfold sometime today. All right, so this is the inducement play that has been shown around here. So I'm expecting that gold will take a move to the upside. So I'm expecting this to happen on gold. Price to trade all the way into this other block and then possibly give us a sell-off to the downside all the way down here. So these are the two things I'm expecting to see happen on gold. All right. First is from here all the way to this level. So let's check it out and see how much that is. That is about 200 pip range. All right. So that's a good place to buy gold. Where gold currently is a good place to buy gold. So you can go and check out for your entry signatures on various time frames. And when you see them play out, you can take your buy of gold from there. One of the entry signatures that is very popular amongst us here during the market color is the box strategy. You can see how that is playing out clearly here. All right, so this is the left shoulder, this is the sweep, this is a tentative break of structure, and then this is another possible break of structure. So we may see price break above here, trade all the way back into this level around 2375 level, and then we expect gold to continue trading to the upside from there. All right, so if gold does that, I'll be expecting it to trade all the way to this 1 hour order block right here. Okay, so these are the two levels I'm expecting to see gold trade to. So you can mark this up on your various charts, and then if you're not a gold trader, you can just watch it out. If you're a gold trader, you can take advantage of this trade call right here on the market color. All right, so that is that for gold. That's what we're expecting. Beyond that, we're not expecting so much because there are fears in the market. There are concerns in global economics and global macro. So we want to get a clearer interpretation of that, because there's tensions, there's the Chinese-Taiwan tensions, of course. There's also the Israel and Iran tension. So when there are tensions like this, it's a period of uncertainty, and investors will want to watch what's going on in the market before what's going on in real life before deciding on what to do in the market. So we too are going to be watching. While we are watching, we'll just be taking quick scalps, and then we'll use that to cover up for the day. So intraday on gold, I'm expecting a buy to sell model to play out, and I've shown you where I'm willing to buy from and where I'm willing to sell to. All right, so that is that on gold. Now let's move over to the yen basket. Quite interestingly, the yen is becoming funnier by the day, and the reason why we say so is that we've been seeing strange moves on the yen. I know a lot of you that trade the a lot of you that trade the yen-related currencies, USD-JPY, GBP-JPY. I know most of you would have seen the 80 pip spike that happened yesterday, and the 40 to 50 pip spike that happened the day before. All these are because of concerns that are coming out from the Japanese economy. The governor of the Bank of Japan, that is Ueda, he's giving signs that the government may intervene. We usually call it yen intervention. That is just a nickname to what usually happens in the yen, where the government or the Bank of Japan intervenes in the yen. Maybe they buy up their Japanese debt or their Japanese bonds so that to boost the economy. And then we're going to be seeing rallies on the yen, especially when the yen is falling quite flat against other major currencies. So this is what is coming into play once again. Sometime last year and in 2022, yes, between 2023, sometime it happened. That was about 200 pip spike. Happened like 2 times in 1 week, 200, and another one was 100 pip spike. In 2022, something very similar, about 150 pip spike was happening almost on a daily basis. Whenever you're seeing that the yen is falling this much, the government have a character of intervening. All right, so that is one thing that we just thought to clear out with you guys. So if you're trading the yen, let's put it up on the USD-JPY. You can see USD-JPY, this is the spike that happened to the downside. So you can see the spike that happened on USD-JPY all the way to the downside, 80 pips plus yesterday. And the one that happened the day before is about 50 pips. Right? Yes, 50 pips. So all these things are going to be happening around the end, and we don't expect it to end anytime soon. Even as at day before yesterday, the Minister of Finance in Japan, that is Suzuki, he said they are looking to increase interest rate furthermore, and then they are going to overlook inflation. Since inflation is around 2%, they intend to increase interest rate. And all these are going to be causing the yen basket to give some rally. Okay, so we may be expecting some rally on the yen basket, and those kind of rallies would most likely not obey price action and normal market structure that you and I know. So in essence, what I'm trying to say is that when you're trading the yen going forward, maybe into the rest of this month, you should be a bit careful and check out for fundamentals. All right, and then make sure you apply extra proper risk management when trading any yen-related currencies, because these kind of things, we don't know when they can happen. It can happen at the spur of any moment, all right? So for the yen currently, with what I'm seeing, I am expecting some pushback up on the yen. I'm expecting some buys on the yen to unfold later if they're able to fulfill what they actually said they would do. So I'm expecting the buys of the yen. Let me quickly show you where I'm expecting these buys to get to. One of the places I want to see the yen buy to is this mitigation block right here. Okay, this is one of the places I'm expecting the yen basket to buy to if it's going to really buy. All right, so I'll be looking out for this level on the yen basket. All right, so let's look at GBP JPY. All right, so on GBP JPY, so on GBP JPY, we're looking to see some further spikes on GBP JPY to the upside. All right, because of the CPI that was released today. But that is not enough for us to continue going further higher on GBP JPY generally. For me, I'm expecting to see some sell-off of GBP JPY. If you can see, using normal box structure, you can see how that has formed somewhere around here. This is the box structure for GBP JPY sell. Right here, here it is. So I'm still expecting GBP JPY to sell off alongside other yen pairs. I'm expecting to see some decent sell-off of the yen pairs to the downside. And one of the places I'm expecting GBP JPY to sell off to is this level right here. I'm expecting GBP JPY to sell off all the way to this level right here. Okay, so if you are trading GBP JPY, I think you should also look to take advantage of this analysis. Their CPI came out earlier today, and it's the result of this spike. CPI came out even way more than expected, right, by about 0.1%. So we're expecting that move has already taken place. We're expecting the real move of GBP JPY, which is a possible sell, to take place all the way to the downside. So I'll be looking out for my entry signatures on GBP JPY because it's very interesting pair, looking at the fundamentals from the two different countries. So I'll be looking forward to a sell-off of GBP JPY to the downside. And then finally, Euro JPY, I'm also expecting a continued sell-off of Euro JPY to the downside. It's already giving me sell entry signatures, so I'll be looking for confirmation. So once I see confirmation, I'll be selling Euro JPY all the way to the downside, and this is the level I'm expecting it to trade to, right, somewhere around here, 162.701. All right, so if you see your sell entry signatures on Euro JPY, feel free to take the sell all the way to this level. Okay, so these are my outlook. These are our outlooks on GBP JPY, Euro JPY, and the yen basket generally, and also on gold. At this point, we're going to entertain questions if you have any, and then we're going to, of course, be taking commentaries from our boss, Mr. Olufukeji, Ejimi, Adegbeye, the profitable investors. Good morning, sir.
Good morning, CJ. You caught me unaware. Unawares, you caught me unawares. I was just listening. I just heard my name. We are going to be taking commentary. I'm like, who is we? When are we? Where will we? Because it's 8:57, I usually come up around past 9. Anyways, good morning, everyone, and welcome to the market color for today. So very quickly, let's look at CHF JPY. We have been on that for a while. Let's look at that markup. If we still have that screenshot that we took and that markup, let's look at it. Please, let's look at it. I just okay, so let's look at it. What trades am I looking to take today? Oh, okay. So for the record, prior to now, I've been looking at GBP USD. I've been looking at GBP JPY. I've generally been looking at GBP, pound versus the dollar and pound versus the yen. But gradually, I'm moving my focus to commodity currencies, Aussie. And there's a reason why I'm moving my focus to those commodity currencies. It's very simple. We are currently in a risk-on, risk-off environment. What do I mean by that? There are rumors of war. Israel, Iran, China, Taiwan, the ones that are already going on, Russia, Ukraine, as well as Israel, Hamas. So because of that, I'm looking to see flight to safety and risk off. Flight to safety and risk off. I believe those are the themes that are moving the markets right now. Flight to safety and risk off. So what I mean is, if you see people taking trades, they're either taking trades because risk is on, or they're either taking trades because risk is off, or they're either taking trades because there's a flight to safety. In the regime we are in right now, in this second quarter, fourth month. Second quarter means January, February, March. First quarter, Q1. Second quarter is April, May, June. That's Q2. I'm saying this because somebody came and said, I'm speaking big grammar yesterday or day before when I was talking of central bank monetary policy divergence. That monetary policy divergence, those words are big grammar to him. And I told the person, well, we are trading versus central banks, global banks, hedge fund managers, institutionals. I don't think they keep it that simple. Those are complex organizations. So we as retail traders should know what they know. But I'm breaking it down now. So Q2 means second quarter, which is April, May, June. All right. H2 means half year. H1, H2, from January to June, June to December. I hope this makes sense. All right. So because of the shift, prior to now, October till now, we'll look at all this on the charts. Let's just keep it on CHF JPY. From October till about March, April, the theme was buy the dollar. Buy the dollar, sell everything and buy the dollar. So the theme was dollar demand. Dollar demand. But now it's changing and it's looking like the regime we are in is safe haven, risk on, risk off. So that's why I'm shifting now to Aussie, which is a commodity currency, which is a risk on currency. And I'm now looking at Aussie versus the Japanese yen, which is a safe haven, the Swiss franc, which is a safe haven. So this is how I look at things. This is how I look at things. I try to know what regime are we in, and that helps me to choose what pairs to trade based on the regime we are in. So let's go back to CHF JPY. CHF JPY on the 4-hour, I think that's where we're looking at it. Okay, fantastic. I don't know if some of you remember the markup that we had before now. The markup that we had before now. If you still have it, I told some of you to take screenshots. So what are we seeing here now? We did a review. There's diagonal liquidity at 166.50 all the way to 167.50. If you draw that trend line, you see there's diagonal liquidity there. So they've created that liquidity. They've created that liquidity. And we usually say when they create liquidity, is to consume the liquidity later. So there's diagonal liquidity. There's no horizontal liquidity there, but there's diagonal liquidity, all right? Where is price right now? There's a box pattern there. There's a shoulder. There's a shoulder. After the shoulder, we saw a sweep. And then the break of structure to the downside. Now there's a fair value gap. There's a fair value gap. Exactly. All the way there. All the way down. All the way down. All right. So that's the fair value gap there that price has tapped into. Price has tapped into. Who is sharing a file in the meeting? What file is that? I hope that's CHF-JPY markup. If it's not CHF-JPY markup, you are not supposed to share a file. Beautiful. Fantastic. I'm sure that's what it was. Thank you, Vivian. All right. So do you see where price has gone? Price has gotten into that fair value gap. And it has consumed the diagonal liquidity. There was diagonal liquidity to the upside after the fair value gap. If you draw a trend line, you see the diagonal liquidity there. The trend line to the downside. That whole diagonal liquidity after the fair value gap was formed, it has consumed everything there. Exactly. So it has consumed that one. It has eaten it. It has consumed the liquidity. So it has entered into the fair value gap. And that, of course, is a premium level. It's a premium level. If you take that swing that broke structure all the way down, we're now in 61.8 thereabout. 61.8 thereabout. Okay. Exactly. We're almost touching 78.6. So it's at a premium. It's at a premium. Then there's also another diagonal liquidity from 168.50. You see those wicks? Those wicks, very strong wicks, 2 rejection wicks. If you draw the trend line, exactly. That's also liquidity that must be consumed. And there's a fair value gap at the base of that liquidity. There's a fair value gap at the base of that liquidity. Exactly. So what are we trying to say? So we've shown you the liquidity to the upside, right? So what are we trying to say? Having shown you the liquidity to the upside, we have now shown you the liquidity to the downside. So there's a fair value gap at 168, and there's diagonal liquidity below 168. What am I expecting? I'm expecting price to tap into 170 level plus or minus. And when it taps into it, I'm expecting it to break down to the downside. Now, how do we expect it to happen? There's a shoulder being formed. There's a shoulder that is being formed, that was formed at 169.46. There's a shoulder that was formed there, 169.46. Exactly, that's a shoulder box pattern. So that move to the upside is looking like a sweep. That move to the upside is looking like a sweep. So if price breaks it sharply to the downside, after it taps to the upside, it comes down, breaks that move to the downside, and it goes back and taps into that shoulder at 169.50. Exactly. Exactly. Beautiful. But I don't expect it to come down so much because of the liquidity. It will not grab that liquidity. Yes, if it grabs that liquidity, it may not continue. Exactly. So it will go and clear that diagonal liquidity at 168.20 levels. It will clear it all the way down into that fair value gap. That's your first take profit. Into that fair value gap, that's your first take profit. Then if it breaks that level, because if you zoom out, it's supposed to break that level and consume the liquidity all the way down and form a lower low, because this is a downtrend. So that's the first take profit. And the second take profit is that it will go all the way down to 166.50 levels. That's our second take profit. Does this make sense? So these are the things I'm looking at. We can take a screenshot of this. This is exactly what I'm looking at on CHF JPY. And of course, I'll use my yen basket. I'll use my yen basket. I'll use my yen basket. So we've been following this trade. Get ready to enter the trade. Don't miss it. You have been waiting since. I've been waiting since. It should be like 200, 300 pips. So your stop should be around 170 spot 30, 170 spot 50. If it does this, and then your take profit is all the way down, you should get a good risk to reward ratio. The reason for this trade is still monetary policy divergence. The reason for this trade is still monetary policy divergence. The reason for this trade is still monetary policy divergence. I'm talking like one crypto influencer that used to repeat things. He say, share the link, share the link, share the link. Volatility is the price we pay for huge profits in this market. So forgive me. Sorry, some people are like, I'm here serious, you are playing. I'm here serious, you are playing. All right, so we'll check yen basket to see if it is going alongside our trade sentiment. So let's see yen basket. Let's see yen basket. For some of you know that influencer. I like the guy. His energy is crazy. His energy is crazy. Crazy. So yen basket. All right. So we need to see yen basket break to the upside. Already we see a box pattern. Yes or no? It has grabbed liquidity, the liquidity from the 18th. It has grabbed liquidity, the liquidity from the 18th. See that horizontal liquidity? It has grabbed it, has done the sweep. Then it broke structure to the upside and it came back down for another sweep. Another sweep. So if that level holds, if that support holds, where is the diagonal liquidity that is going to consume? Where is the diagonal liquidity? The liquidity to the upside that is going to consume. You draw the trend line for the liquidity we expect it to consume, all things being equal. Where is the liquidity that it should consume? That's one. Even the one sloping, I tell you, the sharper the slope, that one is even far. There is one right now that it has done. Yes, you are correct. There's horizontal liquidity. Look at those equal tops. It's not even triple tops. It's like quadruple, 5 different tops there. There's engineered liquidity there. That's created liquidity there. Exactly. That's horizontal liquidity, straight line liquidity. Then slant line liquidity. There's a slant line liquidity, exactly, all the way down. It's very sharp. From 6440 to 6290. 6440 to 6290. There's liquidity there. You draw that trend line. Let it touch the top of that other one. The 3 lines, let it touch the 6360, and then where price currently is, there's liquidity there. 6360, 6360. Exactly. All the way down, all the way down. So there's liquidity there. There's straight liquidity, straight line liquidity, and there's sloping liquidity. So it looks juicy. So it created a shoulder around the 20 feet. It did the sweep. So let's see if it will break to the upside. If it breaks to the upside, that gives another support or reference to our CHF JPY sell. But if it breaks to the downside, CHF JPY is cancelled. All right? And when I say break to the downside, I mean violent break to the downside. So this is what we use to confirm. If price respects that shoulder, respects that sweep, and goes up to clear that liquidity into that fair value gap that was drawn previously, then we know CHF JPY is not going to fly. All right? But if we follow how price moves, price grabs external liquidity, which is the swing low, then it goes up to grab internal liquidity, which is fair value gap. So that's how it goes from external to internal and so on and so forth. So that's CHFJPY. Now I said, so does this make sense? Do you understand the analysis that I've done? Do you understand the analysis that I've done? So let's keep watching this. So when CHFJPY starts to fall, and if yen basket starts to rise, we know that we're looking at 200, 220, 250, safe pips. Safe, all right? Safe. Okay, now if it doesn't happen, then the trade is negated. Someone can now look and say, oh, then what about the sell to the downside? Well, if you're going to sell to the downside, look at the shoulder, yen basket. Look at the shoulder at 6,400. There's a shoulder at 6,400. 6,400 levels. There's a shoulder. It's not by analysis, it's by execution. But yes, thank you for the analysis compliment. I'm grateful. It's when you do good analysis, you can do good execution. So now I'm showing the opposite. That will be the sweep. That will be the shoulder. That will be the sweep. That's the break of structure to the downside. So we expect price to return to that place and collapse down. Whatever the case may be, you still see that there's upside for yen basket. There's upside for yen basket. There's upside for yen basket, all right? So that's basically it. Now, let's go back to intraday trade that I'm looking at. So I'm just following on this CHFJPY because it's a recurrent theme. We want to see how it will play out. So for today, intraday-wise, I'm looking at AUD, the Aussie. I want to buy the Aussie, AUD. I want to buy the Aussie. I want to buy the Australian dollar. I want to buy the Aussie. That's what I'm tentatively looking at. Intraday. Yes. Why do I want to buy the Aussie? Well, there are many reasons. If you look at this price chart for the 4 hour in the past, how many, whatever, is forming higher highs. Do you agree with me on that? Higher highs, higher highs, higher highs. So that's broken structure to the upside. Where is price currently? So are you seeing the higher highs and the higher lows? So that's an uptrend. So that being said, where are the places I'm looking at for my buys? We can zoom into the 1 hour. We can zoom into the 1 hour. Okay. Zoom into the 1 hour. Where is my sweep? Okay, as you see, price is actually on another block. The other block that was formed since the 3rd. Price is on another block. Since the 3rd. You can zoom back out, CJ, sorry. Exactly. Do you see that other block right there? The place where price took off from? Exactly. That other block, price tapped into it, right? So that's what's informing my buy. So I'm looking at everything that happened there as a pullback, a pullback. So that's my shoulder. That's my sweep into that point of interest. That's my shoulder. That's my sweep. That's my shoulder. That's my sweep. Where's my diagonal liquidity that price will tap into? Or my straight line liquidity that price should clear, should consume? No, if I'm buying, okay, so yes, that one now is for the pullback. CJ, you are correct in the sense that if you are looking for the pullback for the buy, if we want to buy, we have to look at diagonal liquidity or slanting liquidity that is slanting down. Exactly, because buyers are going to clear that liquidity. Exactly, that's the liquidity there. Exactly. So there's also fair value gap at the top. There's a fair value gap there. So price has cleared external liquidity. So there's a fair value gap at 99.60. Fair value gap at 99.60, where the buyers can exit from. Exactly. So I've shown you the straight line liquidity at that fair value gap. Then there's liquidity all the way up. All the way up, there's liquidity there. So what do we expect price to do? There's a shoulder to the downside, upside down shoulder. There's a sweep to the downside. We can look at 50% of that week, 50% of that week, 50% of the sweep. I think they call it consequent encroachment, which simply just means 50%. Exactly, 50% there. Exactly. So that's where we are looking for our potential buy, 50%. So price will clear that diagonal liquidity to the downside because liquidity always acts as a magnet. It will clear it to the downside. When it clears it to the downside and taps, CJ, you can put my annotations, my schematics. I can put my schematics there. So we expect price to come into that 50% level, what some people call consequent encroachment. Tap into that. When it taps into that, that's our shoulder. This is our sweep. We expect price to break structure to the upside. We expect it to take out this fair value gap. Why? Because there's so much liquidity above the fair value gap. So our first entry is here, 98.78. Our second entry is if this fair value gap fails. So that will be above 99.60 and then all the way to that high there to clear that liquidity. Now there's another fair value gap here. Price can stall there. Those are places where we, as much as possible, want to take out part of our profits. I hope this makes sense. So to clear this liquidity to the downside, then move to the upside. Now, remember what I told you about box pattern failure. When box pattern fails. Now, for the sellers, that fair value gap is where they are supposed to be selling. Yes or no? Because that means this is the shoulder at 99.80. This is the sweep. Then this is the break of structure to the downside. CJ, are you with me? The shoulder that was formed at 99.90. The shoulder that was formed at 99.90. 99, 99.90. 99, not 98, 99. 99.90. Exactly, that's a shoulder. And that's a sweep. Remember I told you when box pattern fails, it is a signal for a continuation. So if you're looking at box pattern, right, that's the shoulder there, that's the sweep, that's the break of structure to the downside, yes or no? So when price taps back into that level, it's supposed to sell following box pattern. But if it fails to sell, it will continue buying. So I'm showing you all the entry points. You either enter your buy at 98.78, or when that fair value gap is breached, when it's taken out, and when that left shoulder is taken out. If it takes out this fair value gap and it takes out that left shoulder, my brother, you can add to your buys. So the first buy is at premium, sorry, at discount, when price clears this sideways liquidity down. The second buy is if this fair value gap fails. And the third buy is if the shoulder fails. I hope that makes sense. And then if that continuity is going to clear all of that diagonal liquidity. When box pattern fails, it's a signal for continuation. Now, that's not a hard and fast rule where you just say box pattern has failed, enter the buy. I'm saying that box pattern is showing you the battle between buyers and sellers. So it will show you the place where the sellers fail. And of course, if sellers fail, who is winning? Buyers. So that's not that you just say box pattern has failed, enter the continuation. No, there are patterns we look out for around box pattern failure. Is this helpful to anybody? Is this analysis helpful to anybody? So how do we layer this? We go to FinViz and we see our sentiment on FinViz. We want to see risk on. We want to see risk on. We want to see risk on. So what do you see is happening to NZD? NZD is buying. What's happening to AUD? AUD is also buying. What's happening to GBP? GBP is also buying. Those of you, if you know, you know. What's happening to CAD? So is it looking like risk wants to come on? Yes. Now that I've seen NZD is stronger than AUD, I can just switch my analysis to NZD USD. because NZD is stronger than AUD, but it's still the same logic, risk on. It's still the same logic, risk on. All right. So that's basically it. Now, I don't know whether I'm going to do AUD JPY or AUD USD. Okay, you see AUD just jumped, Abi? It just jumped now. Risk is on. So is it going to be AUD JPY or AUD USD? I don't know. That depends on what EM Basket is telling me and what Dixie is telling me. I hope this has been helpful for somebody. If you have questions, ask your questions. If not, we head over to CJ to continue. Sir, is there a class to join to understand box pattern entry, sir? We had that class, I think, last week for free. 2 days. We did it on a Wednesday and on a Thursday. We explained everything about the box pattern for free. For free. So I think the replay is available for a fee, a small fee. So yeah, that's basically it. All right, CJ, over to you. Thank you very much for your time.
All right, thank you very much. Thank you very much, sir, for your insightful analysis and commentary as always. We hope that every analysis that has been given here is taken advantage of by everyone who is here on this live call. And just so you know, we have a premium group where we share all our trade markups, our trade signals to everyone who is in that group. We show you where we are entering the trade, where we are putting our stop loss, and where we are putting our take profit at the moment we on the floor are doing so. So if you want to be a part of that group, you don't need to pay any fee to be a part of it. All you need to do is to sign up with our preferred broker using the link that is going to be provided to you on the chat box. Once you sign up with our preferred broker, you fund your account with, say, $500, $1,000, $20,000. After you've done so, you send us a screenshot that you funded your account, and within 3 minutes, you're going to be added to that group so that you can start trading alongside us and also withdrawing alongside us. All right. So thank you very much, everyone, for joining today's market call. We're going to be reconvening around 3 p.m. to give a London session recap and New York session analysis. Thank you very much for joining. Just so you know, the ATM cash flow is commencing today. So those of you who signed up for the ATM cash flow, we're going to be having our class today around 10 a.m. The class is going to be running all through till Friday, and even further classes are going to hold next week. All right. So that will be all for now. If you wish to reach out to us regarding any of our products or services, do well to send us a WhatsApp message on our official line 081 60 99 50 30. All right. Until we meet again by 3 p.m. My name is CJ. I wish you good luck and good trading. Cheers and God bless, guys.